We think that you cannot continue cutting wages and pensions. You cannot continue increasing taxes because the economy is at a state where more taxes would actually backfire on us. There is scope for additional cuts in spending, government spending, and we have been discussing some of these. We'll see how we come up at the end of the negotiation with the Troika.
So it'll be a budget that won't raise more taxes and it won't impose further welfare cuts?
It's going to be a budget that would not raise more taxes than those that we have already committed to doing, because there will be a small increase in VAT, as we have already committed to the IMF program, the EU IMF program, and there is going to be no cuts in wages or pensions.
The market, the bond market, having shown such enthusiasm, and actually the debt, 10-year debt of Greece came on 9%. Now it's back over 11%. What happened to cause the lack of confidence and push bonds back up again, yields?
Well, two things. One, there was a widening of all peripherals. I think there was a broader context within which was set. But the second thing is that the market got worried that an election could have resulted in the government losing power, and therefore the market sees very well that we are committed to doing what it takes, and that was the fear that was there. But if you look at this morning, it's interesting that while other peripherals have widened as a result of the elections and the very clear signal that we're continuing, our spreads have narrowed.
But then the market is telling you that it's still not happy with the underlying integrity of the Greek economy.
No, I think what the market is telling us is that it's interested not just in the short term, but also in the medium term. The market looks beyond the next few months, even the next year or two, and it looks at the dynamics of the Greek debt. And those dynamics are sustainable once we move into primary surpluses and once growth gets back going again. That's going to be from 2012 onwards.
Fortuitously, last night I received an email just from a viewer who says the crisis is much worse than it appears in the news. The worst sectors are small, poor people and SMEs. The unemployment figures are much worse than they appear. The banks have turned off the taps completely. Productivity is an unknown. I wonder what is my future in this gloomy economy when all we hear in the news is the same thing. We're on the verge of bankruptcy.
I would respond to your viewer by saying that, for example, the situation is difficult, there's no question about it. We are in a recession where GDP is falling 4%. That means closures, that means unemployment going up. However, for example, banks are continuing to lend. You have a net increase in bank lending, which is positive. We've had some of the big Greek banks having a capital increase in their capital adequacy ratios. Capital share increases, importantly. Their interbank lines are opening. That's going to be more liquidity into the system, more funding. And therefore, we're sure actually, that next year's GDP growth is going to be better than this year.
There will be growth in...
No, we're hoping that we'll have at least 1 quarter of positive growth next year, but it's clear that the recession is continuing to next year. The program predicts a GDP fall of minus 2.6%.
Just one other area. We must return to the perennial question of the overall debt level. There are people who tell me that even if everything goes according to plan, that the level of debt, taken into account what was on the books previously and the amount that's coming from the EU fund, is still unsustainable, even once Greece's returns to growth.
That's not correct. I know there's a lot of people saying that, but actually sustainability of the debt level depends on whether you have significant primary surpluses, and we're going to be having those from 2012 onwards, and if growth resumes. And at the end of all these structural reforms, you can have a positive shock to the economy and therefore high growth rates. And don't forget one thing, private debt as a percent of GDP in Greece is very low. And that's an important thing to keep in mind. Compared with other countries, the UK is a very good example, but there's others. Our total debt, private plus public, is actually quite sustainable compared with the rest of Europe.